So this is a sum of investment appraisal, October-November 22, paper 31. Okay. Are you with me? Can you please read the question for me?
X Limited has the option of buying an expensive machine. Production using this machine would be as follows.
Okay,
Year
so
one.
I have an option of buying an expensive machine, and this machine would give me units. Okay, in the first year, I would be producing how many units? 18,000. Second year, I would be producing 20. Third year, 26. And fourth year, 24,000 units. Okay, go ahead.
It is expected that the machine could be sold at the end of year 4 for proceeds of 16,000.
Okay, fine. Read ahead.
The company has a cost capital of 10%. The company has a cost capital of 10%. Applying this rate, the purchase of the machine has a small negative net present value of 180. It has a payback period of 3
I
years
have a
and 10
cost
months.
of capital of 10%, and if I apply this rate to purchase my machinery, I'm going to have a negative NPV of 110. I have a payback period of 3 years and 10 months. I have a payback period of 3 years and 10 months. Can you read the question? Miss Mercy, I'm recording. Read the question.
Explain how a project could pay back during the life of the project while it's having a negative NPV.
Come on, can you explain me this? Explain how a project could have a payback while having a negative NPV. Can you explain me? Okay. What does the payback period tell you?
The number of years it takes for the investment to recover.
Payback. So when I am taking the number of years it will take the investment to pay back, I will take the cash flow and I will take the cumulative cash flow, wherein I do not use the discounted factor. I do not take the discounted factor into consideration. Yes?
Yes.
So in the payback period, my investment could be paid back because I do not take the present value of future cash inflow. So in the payback period, my cash flow is not discounted. Am I correct?
Okay.
So
Yes.
because the cash flow is not discounted, whatever money I am getting, I am just taking that amount of inflow that I'm getting and I would say that it is going to pay me back. But the NPV method uses the present value of future cash inflow. That means it is discounting the future cash inflow. So if a project has a negative NPV, that means the cost is not going to get covered. So my question is telling me, explain how a project could pay back during the life when I already know that it has a negative NPV. So what will you answer? Come on, give me your answer, dear.
How will I say it in?
First thing, in the payback period, the cash flow is not discounted. Yes?
Yes. Okay.
So the project could pay back. Could pay back. Yeah? And the net cash flow could cover the purchase price. But in the NPV, the cash flow is discounted. So it can become negative because the present value of future inflow will not be able to cover cost. That is a difference, right? Payback period is ignoring the discount factor, wherein the NPV is taking the discount factor into consideration. If NPV is negative, that means I am not recovering my investment if I discount it. And that is why anything that has negative NPV, we reject the project.
Okay.
The disadvantage of payback period that it is not considering the discount factor. You just have to write 2 points. Are you with me?
Yes.
Now I have additional information. Read.
It is the policy of the company to reject any project with negative NPV. The supplier of the machine has stated that the machine should receive a maintenance service once for every 500 units produced.
Okay,
Each
so
service,
every time you produce 500 units, you have to service the machinery, and the service cost would be how much?
300.
300. That means my number of services I can calculate which I would need, right? Every
Yeah.
time I produce 500 units, I have to do one service. So tell me, in the first year, how many number of services I would need?
36 services.
How much?
36.
How? 18,000 divided by 500. Yeah, so in the first year, I would need 36 services. In the second year,
In the second year,
40.
40.
In the third year, 52.
Yeah.
And in the fourth year, I would need 48 services. You with me?
Yes.
Okay, so this is the number of services that I would need. This is the number of services that I would need if I am going to service my machinery based on the actual things that they want. Okay, fine. Read ahead. Read ahead.
The finance director has suggested servicing. The finance director has said the cost of this level of servicing had been included in the calculation of the NPV, negative NPV.
Yeah.
The finance director has suggested servicing the machine only once for every 2,000 units produced in order to
Okay, so
reduce
this
costs.
is my finance director's suggestion. What is the finance director suggesting? That because I am servicing the units at 500 after a production of 500, and this is resulting into a negative NPV, what you should do, that you should service the machine for after producing 2,000 units, so that you can reduce your cost and you can improve your NPV. So as per the finance director's suggestions, in the first year, how many services would we need? 18,000 divided by 2,000. In the first year, I would need 9 service. Yes.
Yes.
In the second year,
10.
10. Yeah, in the third year, 13. And in the fourth year, I would need 12 services. Okay. Why am I doing this? So I can reduce my cost and I can improve my services. So instead of 36 services, I will do 9. Instead of 40, I will do 10. Instead of 52, I will do 13. And instead of 48, I will do 12 services. This is as per my finance director. But then my production manager also came in, and the production manager is telling me something else. What is the production manager telling me?
The production manager said that reducing service in this way would increase the repair cost. He estimated the increase in repair costs would be as follows.
Okay, so production manager is telling that if you do this, you are going to incur more of repair costs. And they want you to complete this table to calculate your changes in the cost. So your first table is asking you, give me the decrease in the number of services. So what would be the decrease in the number of services? The actual service required and the actual that is done. Just minus it. So what is the decrease in the number of services for year 1? It would be 36 minus 9. Here it would be 40 minus 10. Then 52 minus 13 and 48 minus 12. So what is the decrease in the number of service? 27, 30, 39 and 36. Are you with me?
Yes.
Per service cost will become how much?
300.
So what is the cost saving that you're doing? What you reduced multiplied by 300. So this is the cost saving that you're doing. Are you with me?
Yes.
You are going to save this much, but you're going to incur repairs costs. So your cost savings will reduce by that much amount. Okay. So what is your total change?
6,100. 3,400. 900 and 9,100.
9,100. Okay. So in the first 2 years you are saving, but in the next 2 years it is going to be a loss for you. But I think overall it's going to give a good picture. Are you with me?
Yes.
Now go to the next part. Calculate NPV which the purchase of machinery would have if the level of service was reduced. So if the level of service is reduced, I am going to have a savings of this much. Yeah?
Yeah.
Okay. So if the level of service was reduced, I'm going to have a savings of this much. So I will just take this into consideration and I have to calculate the NPV if the level of service was reduced. So come on, I will do. I have years. That is 1, 2, 3 and 4. My total change would be how much? This would be my savings that I'm going to do. Somewhere it is savings and somewhere it is spending. I will multiply it with the discount factor. Then I will have the discounted cash flow. A present value of the savings. So this will become how much? Are you with me?
I didn't understand why we're multiplying the savings.
Okay, fine. Calculate the NPV which the purchase of machine would have if the level of servicing is reduced. Do you have any inflow, darling?
The number of when they selling the units.
No, but do you have any inflow? What is the selling price? Do you have it?
No.
No. You do not have any inflow, but they are telling you that your machinery has a negative NPV already.
Okay.
Yes. And they are telling you that if you reduce your number of savings, you are going to save this much.
Okay.
And the service charge was already added while calculating the negative NPV.
Okay.
So they are telling you that if you're decreasing the number of savings, the number of services, you are going to save this much. So could you calculate? So could you please calculate the NPV which the machine will have if the service is reduced? So if the service
Fine.
is reduced, you're going to save this much. So you're going to calculate the NPV. That means how much you are going to save. Because the servicing charge is been added when you got the negative NPV. So if you're going to save that money, if you're going to save some money, you're going to give an impact of the savings and see if the NPV is becoming positive or not.
Okay.
Understood?
Yeah.
Okay. So I already have a negative NPV of how much? 180. And this 180 is taking into consideration the number of services that I will be doing.
Okay.
So now if I am reducing something, I'm going to save something. So what is the present value of that savings? So the present value of that savings is 1462. That means my NPV will increase by 1462.
Yeah.
When I do these savings.
Okay. So we
When I
added.
do the savings, my NPV will increase. So what is my existing NPV? It is negative 180. So if I do these savings and I take the present value of those savings into consideration, I will get a new revised NPV of 1282. So now I can think to buy the machinery.
Yeah.
Okay. So if I reduce the number of services, I can think to buy the machinery because the project will also pay back and NPV is positive. Are you with me? Are you with me?
Yes, miss.
Advise the directors whether or not they should purchase the machinery if it operated with reduced level of services. Can you tell me? The NPV is now positive.
Yeah.
But there will be more breakdowns. That means there is increased repair cost. That means you will not be able to fulfill the order on time with loss of reputation. If you are taking the financial factors into consideration, you should take the advice of the finance director. However, if you take the non-financial factors into consideration, you should not consider buying the machinery. Okay?
Okay.
Can I move ahead?
Yes.
Okay. Come on, read ahead.
The production manager also thinks that the sales proceeds of the machine at the end of year 4 would be different from the existing estimate if the machine was perceived as not properly maintained.
Okay. So basically, production manager is thinking that the sales proceed at the end of year 4 would be different from existing estimate. What is the existing estimate? 16,000. Okay, our existing estimate is that after year 4, my machinery would give me 16,000 if I did the servicing of the machinery after producing 500 units. Yes,
Yes.
but now I am going to service the machinery after every 2,000 units.
Okay.
Yes, so my machinery is going to become bad. Are you with me?
Yes.
So if the machinery is going to become bad, I am not going to receive 16,000.
Okay.
So they are telling me calculate the sales proceed at which the NPV would be 0. So they are telling me calculate what should be the sales proceed so that you get the NPV 0. Now at the end of year 4, you have your cash flow, discount factor, and present value of cash flow. Are you with me? Are you with me? At the end of year 4, your discount factor is 0.683. Are you with me?
Yes.
Okay. Your present value of your future cash flow is 6215 at the end of year 4. And the change is how much? 6,100. Are you with me?
Okay. Yeah.
Are you with me? I will put this entire table over here.
Miss, can you repeat that point again?
Okay. I'll put this entire table here. You understand properly. The finance director is telling me that because you're not going to service your machinery properly, because you're not going to service your machinery properly, you are not going to get sales proceed of 16,000. So they are telling you at the end of year 4, what should be the sales proceeds? What should be the sales proceed so that your NPV becomes 0? Are you with me?
Yeah.
Okay. So this is your existing NPV now after revising. Are you with me?
Yes.
Okay. At the end of year 4, you are going to receive something which, if discounted at 0.683, would give you something, and when you add this up, your NPV will become 0.
Miss, how will the NPV reduce like that from 1
Okay.
to 8
So
to?
they are telling you that after these changes, at the end of year 4, you are going to have an NPV of 1282.
Yeah.
Positive NPV. But this is taking into consideration if you are going to sell your machinery at 16,000.
Okay. Okay.
But you are not going to sell your machinery at 16,000
Okay. Yeah.
because now you're not going to get 16,000. Are
Yeah.
you
Yeah.
going to
So
get
it will
16,000? No, you're
no.
not going to get 16,000. So what would be the selling price of your machinery so that your NPV becomes 0? I don't know that. If my NPV should become 0, that means over here the discounted factor should be negative 1282.
Yeah. It
Okay,
will
because
cancel.
my NPV should have become 0. So could you tell me the sales proceed if multiplied by the discount factor would give you 1282? What would be the sales proceed?
It would be
1282 divided by this into this will give you 1282. This
Yeah.
into this would give you 1282. So 1282 divided by 0.683 will give you the net proceeds at the end of year 4.
Okay.
So 1877.
Okay.
So now what is the sales proceed at which the NPV would be 0?
1877.
No, 16,000 is your actual sales proceeds. So from that you will minus 1877. So 14,123 will give you will be your new sales proceeds. Are you with me?
Still a bit. I don't understand that one.
One minute, okay? Okay. So we are here on the change, right? Are you there with
Yes.
me? Are you there with me?
Yes.
So we are in the change in the net cash flow. This is your discount factor and this is your present NPV, present value of your future inflow. Okay. So this is your normal NPV. Are you with me? What is your
Yes.
shortfall? Your shortfall is 1282. Shortfall divided by the discount factor, you will get the change in the sales proceeds.
Okay.
Yeah. So what will be your change in the sales proceed?
It'll be
1877.
one.
Because we are doing everything over here that is based on change. Yes?
Fine.
Okay. So 1282 divided by 0.683 will give you your change in sales proceeds. Yes?
Yes.
Your actual sales proceeds is how much? 16,000 that you had estimated.
Yeah, yeah.
Okay. Your actual sales proceed is 16,000.
Yeah.
So come on, tell me.
1000.
What will be your new sales proceed or your change in sales proceed?
Okay. 14,000. 1, 2, 3. Okay.
16,000 minus 1877. How much will it be? 14,123.
Okay, understood now.
Understood? Explain how a business calculates IRR.
The formula?
What is IRR? You can write the formula of IRR. IRR is that rate of return at which your NPV is 0. You take two discount factors, one which will give you a positive NPV and one which will give you a negative NPV. And then you can write the formula. Okay?
Okay.
So this completes the